Welcome to CryptoCryptid. Today we're going to look at Yearn.finance, and if you want to know more about crypto, make sure you follow our channel. Let's get into the video. YFI is the native cryptocurrency of Yearn.finance protocol. It is a governance token that allows users to vote on which direction they want the protocol to head. Since its launch in July, YFI has become one of the largest Ethereum-based tokens due to the protocol's focus on automated yield farming strategies. In some ways, you could think of Yearn.finance as a robot that always tries to find the best yields in Ethereum DeFi. Decentralized finance, better known as DeFi, has seen parabolic growth as the yields provided by protocols have exploded higher. A crucial part of this growth can be pinned to the introduction of governance tokens, which allow holders to determine the direction they want protocols to develop. Governance tokens are a crucial step in decentralizing DeFi protocols. Riding the wave of governance tokens, Yearn.finance rolled out YFI in July 2020. It quickly captivated the cryptocurrency space as it proceeded to rally from $3 to $30,000 in a month. Before we get into YFI, it's worth giving some context about Yearn.finance, also referred to as Yearn. Launched by Andre Cronje in early 2020, Yearn.finance is an Ethereum-based protocol focused on providing its users with access to the highest yields on deposits of Ether, stablecoins, and altcoins. Andre Cronje is a South African financial technology developer who is motivated to build Yearn.finance after he found inconsistencies in the yields offered by different DeFi applications. After suffering an exploit shortly after launch, Cronje overhauled the protocol to provide users with a new suite of products. Yearn.finance contains a suite of products in decentralized finance, providing lender aggregation, yield generation, and insurance on Ethereum blockchain. Various independent developers maintain the protocol and the YFI holders govern it. The current core products of Yearn.finance include Vaults, Earn, Zap, Cover, and Vault. Vault helps to create a passive investing strategy. Unlike other DeFi projects, end users don't need to have expert knowledge about underlying protocols. Instead, by investing in Vault, users can generate yield automatically based on opportunities available in the market. This is what Vault can do. Use any asset as liquidity, use liquidity as collateral, and manage collateral at a safe level in order to avoid a default. Borrow stablecoins, put the stablecoins to work on some farming, and reinvest earned stablecoins. The Vault benefits users by socializing gas costs, delivering automatic yield generation, and rebalancing processes and shifting capital based on opportunities. This results in the Vaults representing a passive investing strategy without the need for expert knowledge. Earn, a lending aggregator, was the first product from Yearn.finance. As interest rates change between protocols, the funds shift between DYDX, AAVE, and Compound automatically. The users deposit money to lending aggregators' smart contracts via the Earn page. Earn optimizes the interest accrual process for end users to ensure they receive the highest interest rates at all times. It's another one of Yearn.finance's products that ensure high yields for users who deposit into Yearn.finance. Zap is a tool that enables users to swap to and out of various liquidity pools available on the Curve. These pools earn their profit from lending aggregators and by collecting user trading fees by participating as liquidity providers on Curve. Currently, the users have access to 5 stablecoins and can zap into one of the 2 pools, Curve.fi or BUSD.curve.f. Another option is to zap out of these 2 pools and into any one of the 5 base stablecoins. Cover. Underwritten by Nexus Mutual, Cover provides an insurance facility for users to obtain coverage for financial losses incurred from smart contracts or protocols on Ethereum blockchain. It has 3 components: Cover Vaults, Covered Vaults, and Claim Governance. Just like any other decentralized network, YFI also has its own governance rules. YFI token holders control the ecosystem through voting on proposal submissions. The proposals must meet the following quorum requirements: less than 20% of the tokens staked in the governance contracts, majority support of less than 50% of the vote, and implemented by a 9-member multi-signature wallet. The members of multi-signature wallet are voted in by the YFI holders. They may change for the future governance voters. Up until July, Yearn.finance was fairly niche. After the exploit in early 2020 and the cryptocurrency market crash of March, many users were hesitant to use the then new protocol. This changed when Cronje released a blog post in Medium announcing YFI, an ERC20 token launched so users could govern the Yearn.finance protocol. YFI could be farmed through a number of methods, including providing liquidity to Balancer, a decentralized exchange, and depositing capital into Yearn.finance's products. While the Medium post mentioned that YFI had no intrinsic value, the market proceeded to gobble coins up. After starting trading at $3 in a Balancer pool, the cryptocurrency skyrocketed as investors saw value in governing Yearn.finance, which began to gain dozens of millions of deposits. Shortly after the launch, the community settled on a 30,000 coin maximum supply, opting to keep YFI scarce instead of allowing it to inflate further. Users that were dissatisfied with this decision forked the project, creating a fork now known as the DFI.money or YFII. While Wi-Fi was crucial to Yearn.finance, it generated deposits and attention. The coin also had another purpose: to decentralize development and control of the protocol amongst users. The farming mechanism allowed any user, whether they had $100 or $1 million, to earn Wi-Fi at the same time and at the same cost. This meant that any user could acquire Wi-Fi to influence Yearn.finance. Since Wi-Fi's launch, a comprehensive governance portal has been launched where token holders can vote on various decisions proposed by the community. Decisions that have been made thus far include the hiring of a team of marketers and developers, and the addition of certain strategies to vaults. Holders have also made the crucial decision to provide Wi-Fi holders with access to a portion of the protocol profits. Fees implemented with Yearn.finance products accrue to the treasury, which is subsequently distributed between Wi-Fi holders and the team. This makes Wi-Fi a dividend-yielding asset, which is different from Bitcoin or Ethereum. The Ethereum blockchain introduced DeFi to the public. It operates with the help of smart contracts and provides various financial applications such as loans, trading, asset management, and much more. Smart contracts are lines of code that execute automatically when the terms of agreement mature. The current traditional financial system is flawed, and DeFi aims to fix that. DeFi provides a platform for applications that operate beyond just trading crypto assets. These applications are commonly known as decentralized applications. The dApp developers have total control over their applications without the interference of centralized governance. Smart contracts then operate on an if-then principle. The way this works is if the condition is met, then perform the required action. With traditional financial institutions being highly centralized, DeFi and dApps aim to provide a transparent and mediator-free financial service. You have access to better investment strategies, staking opportunities, and loans, with no middleman eating away at your profits. Similar to how cryptocurrencies have revolutionized the transaction meter, DeFi is improving our financial ecosystem. DeFi has led to the creation of stablecoins, which are backed by physical assets such as the US dollar or gold. It is slowly creating a decentralized, transparent, robust financial economy. The different uses of DeFi are lending, decentralized exchanges, derivatives, payments, and asset management. While many focus on the price action Wi-Fi experience, it is most important because it marked a shift in how protocols can incentivize adoption. It has been argued that Wi-Fi's launch was the most fair launch since Bitcoin, as anyone could participate in the generation of the coin while paying the same price. Instead of using an initial coin offering model, where users pay a certain price for each new coin, Wi-Fi users had to participate in the protocol. This mechanism allowed a community to rapidly build around the project, as every user had the same ability to influence Yearn.finance through the governance token. Wi-Fi is not without its challenges. Because Andre Cornier was the mastermind behind Yearn.finance and Wi-Fi for so long, investors are watching his moves with keen intent. This means that if he takes time off, many may see it as a blow to Wi-Fi. As such, some argue that the project is still centralized around this key player. This was accentuated earlier this year when it was reported that Cornier said he wanted to leave the DeFi space. Wi-Fi prices proceeded to crumble amid fears of the project shutting down. The more people realize that our traditional financial system's flaws, the more they will be inclined to decentralized finance. Unfortunately, our economic system is highly centralized, and this is a major issue. However, DeFi has strong potential and can be the perfect alternative to our existing financial ecosystem. DeFi also provides financial access to those without bank accounts, as all you require is a smartphone. Sign up for a ZipMex account today to access the benefits of DeFi, such as Yearn.finance. Wi-Fi's launch marked an industry-wide shift in how cryptocurrency projects distribute coins. By providing an incentive for early users, projects can get quick adoption and community growth. This ties in with the concept of skin in the game, which suggests that those that have a monetary or emotional stake in investment will do what they can to allow it to succeed. Yearn.finance is an interesting protocol that is building unique decentralized finance products. The future seems bright as they hire a team of developers and marketers, but only time will tell if the project will manage to thrive longer in the Ethereum DeFi space. That's all for today, and if you find the video helpful, please like, comment, and subscribe to our YouTube channel. Stay tuned for more cryptocurrency related news, and I'll see you in the next video.